The broadcast is now starting. All attendees are in listen-only mode.
Good day, traders, and welcome to weekly trading recap. My name is Nenad, and today it's 22nd of January 2018, and we will see some setups that I have prepared for you today. Market has been a bit of, well, I can say very calm today, except for some pairs. There isn't much going on in the markets, but we still expect some volatility to be seen during Asian markets and during, well, maybe during the US close. But it's not like the markets have been very active today. It's more like it's consolidation before next phase begins. So before we start, always have in mind this disclaimer that CFD and Forex are leveraged products and can result in losses that exceed your deposit. Please have in mind that everything you see here is my personal opinion only, and this video is not part of the .co.uk website, but the globalnews.com website. You can go and read the full risk disclosure on this web address. Why do we trade around markets? Excellent index offerings, excellent order sizes, order execution, and great safety of accounts, negative balance protection. Have in mind that you can always boost your trading with MT4 and MT5 Supreme editions. Patience is the key to trading success. Do not risk more than 5% per day. My recommended risk is always in between 0.5 and 2% per trade. So you can always put your risk into a stop loss. Stop loss can be 20, 30, or 100 or 200 pips, but have in mind that you should put your risk into the stop loss always. Rules and setups: you can always give price a breathing room before the price actually hits our zone. Also, we enter in the zone, it's called POC. It's the point of confluence. Okay, zone is always within 15 pips of the predicted level, and if you agree with my analysis for entries, you can also trade it. Scaling in is optional. You need to do your own trade and money management. For commodities, okay, and equities, have in mind that you should always watch the zone around the level, and some indices, equities, use bigger stop loss. Recommended risk, as I said, is 0.5 to 2% per trade. Maximum risk is 5% for all trades. Respect your stop loss always, and add a spread to your stop loss, even if you trade via ECN account and if you trade at 2 to 5 pips depending on pair traded. For equities, also you need to add a spread to your stop loss, and commodities. It doesn't matter, you always need to add your stop loss. Add a spread to your stop loss. First touch of the zone is the most profitable. That is why we need to focus on the first touch. And usually when price hits the zone for the first time, that is the time when usually price reverses immediately. Okay, now, depending on time and volatility, we use profit stop after 20 pips, but not less. So usually you will have like 20 pips for your, at least for your profits. It's important to know that you should protect your profits if you trade on intraday time frames. Equities and commodities also. Protect your profits around important levels and use trailing stop. If you trade overnight, you should always have an expert advisor that can manage the trade while you're sleeping. For that, you need to either leave your PC running or purchase a VPS through MetaTrader screens. You can always go to your MetaTrader and purchase a VPS, virtual private server, where you can connect your, let's call it, trailing management expert advisor. Scalp trades should be done at or very close to important support resistance levels. All these trades are calculated by historical levels and Camarilla. Add these levels to your system, pay attention to trend, so you might find other trend-based entries, and the term pips pool is the maximum available number of pips you could have got on my setups. These are results for previous week. You can see euro dollar was good for 85 pips. GBP dollar didn't qualify. Australian dollar was good for 50 pips. WTI 100 pips, gold 80 pips, Nikkei 200 fractional pips, total pips pool 315 to 515. If you made, let's say, 20-30% out of it, you're still good, because it's very hard to capture all possible pips, but sometimes it even happens that we can capture, let's say, out of 80 possible pips, we can get some 75. So sometimes it happens. But for that, especially if you trade on intraday time frames, you really need to have a strong momentum. Without a momentum, it's very, very hard to make some good trades. And it's very hard to actually make some substantial profit if there is no momentum. Euro dollar, this is the chart of euro dollar that we had for the previous week. Just before I start, Yanis is asking for some indicators. Yanis, I might have missed your email. Please send your email now. And right after this webinar, I will reply to you. So this was euro dollar. It was in uptrend. And you see the price went to our, well, this happens from time to time when we have almost no drawdown. Sell position initiated 2280 here, straight from this level. The price dropped nicely here, and yeah, you don't see the slide. Okay, here, euro dollar. So the price went here, then rejected, hitting 21.95. So I think that this was a very, very good counter trend setup, especially because, well, honestly, I've been trading euro dollar for this couple of weeks. Mostly, I've been very successful with trade setups, but unfortunately on euro dollar on Friday I was stopped out, although the price went some 23 pips in profit. I didn't protect my trade, and I was stopped out, unfortunately. But honestly, guys, really, it's because of Friday. Friday is usually day when markets take profits, and I don't like when I lose simply because there is profit taking. So on Fridays, I usually do one trade, and if I lose it, then I don't do any more trades. If I win, I still don't do any trades because of that profit taking. It can really mess up with our technical analysis, especially because price is not behaving. You see, euro dollar basically dropped. I will open the chart a little bit later and I will show you. But at this point, it's important to show results. So it was a sell from 2280. Then even this sell, if you sold it from here, put stop loss here, it would have been successful. Then again, same things happen all over again. Selling from 2280, buying from 2270 to 90, and so on, so on. So basically, this happened for the previous week, and that is why I'm saying the first touch of the zone is usually the most profitable. This was the first touch of the zone, and the price dropped. GBP dollar, we had a sell stop, and it didn't act. It hasn't been activated. Basically, we also tried to get into a long position. Long positions were good, if you can see here, but it didn't make it to our POC zone. Basically, just made it to 37.40, then it stopped short and it went up. So it didn't make another push towards 37, because I am sure that if the price had dropped below the 37.40, I'm sure that it would have been a POC zone entry. But this was a support that needed to break. It didn't break, and the price spiked up, didn't hit our POC. But maybe if you use your own systems or methods, and you saw that price is very reluctant to actually go more to the downside, maybe you capture some pips and you made some money out of this long setup. Australian dollar 79.30 was a buy position. Exactly at this spot, the price rejected. Okay, and this is the screen. Sorry. So Australian dollar, the price rejected. 79.36 was the price, and it was clearly in the POC zone. 79.30 was the POC zone, so 79.45 and 79.15. Okay, this is the medium point always, and the price was in the zone. Bang, it went up. What I usually do is, guys, now of course it depends from the size of your account, but even if you have low accounts, you can open Admiral Market standard account and you can try to trade with 0.05 lots if you cannot trade with 0.10, and effectively then you will be able to scale in and scale out of positions. On ECN accounts, 0.10 is basically it's the least volume that you can trade with, and usually you need to have more than 0.10, like let's say 0.20, in order to scale out. I'm almost always scaling out of my positions, and I've been actually an intraday trader for a long time, and I know that if you don't scale out, usually during intraday moments, the chances that the price might reverse and then hit your stop loss. It doesn't apply to swing trades. You can scale out less frequently, but still on intraday time frames, at least for me, it's a thing that has been giving me a success in trading. And as I say, I usually scale out, let's say 15, 20 pips, depending on volatility. Sometimes I can do it after 30, 35 pips, but only if I'm monitoring the price. So here, guys, obviously the price was in uptrend, bang, it went up, and it even overshot my target that was 79.90. It went to 70.37 and then rejected. So Australian dollar was a bit, well, I can say a bit successful in its trend move. WTI, or so-called oil, again, a good setup. 63.30 was a buy position, sell position was 65.30. A week before this one, so before 2 weeks ago, we had a losing trade on WTI. Now we had a winning trade on WTI, and it was a bit good because the price dropped to our POC zone, then it went a little bit up, then again it dropped, and then it made some nice surge towards 64.33. So nice pips on WTI. Gold, also successful trade with gold. 30.45 was sell. Price went to 13.44. It dropped and bang. Okay, it really dropped hard and made some great move. So I hope that you managed to grab something out of it. So it went up, then it rejected. So you see, gold was a very successful trade. And optional trade, Nikkei. This one was also good. Well, it didn't go straight through 23,530, but it came close, 23,636. So it's like it was close to our POC zone, but then when it went up, so if you trade Nikkei, if you trade Japanese 225 index, it usually correlates good with the dollar yen, pound yen, yen pairs. When dollar yen is going up, Nikkei usually follows. So then if you are not Nikkei trader, have in mind that it's a very fast index and it's much faster than dollar yen. So maybe if you use some sort of correlation or system that can show dollar yen and Nikkei, you can, if you are successful in dollar yen trade, usually I think, in my opinion, you will be also successful with Nikkei trades too. And this was another good setup. So for the previous week, guys, this was the result. As I say, this is all pips pool, so it doesn't mean that you made all this amount of pips. But as I say, even if you made 20-30% out of it, it's still good because it's not very high. It's not very easy to manage all this pips pool. Sometimes we can do it, but sometimes we can't. Simple as that. Now for this week, I have prepared, of course, setups as always. I'm still waiting, guys, for something to develop in the market. Honestly, I have two positions now. CAD yen that is in a loss and Australian dollar that is in a slight profit. I will show both. You don't need to trade it, but if you want to trade it, you can. As I say, out of all these trades that I do here, if I see a setup, I enter the trade. My my maximum risk is 5%. So let's say that if I make two trades and I put 2.5% of risk in those two trades, then I don't trade this, guys. but I'm trying to also trade what I see here, and I'm trying to put 1% of risk on each trade in order to make all of these 5 possible trades. So now we have even more than 5, because I started to send you also commodities and indices setups, not just Forex. So it's everything is about money management, guys. It doesn't matter, guys, if you win 3,000 pips or you lose 100 pips. It's how much risk you initially put in a trade. So because of that, sometimes, because people have been asking me, Nana, do you trade these setups? Yes, I do, but if I don't trade it if I'm already in my risk, within my risk margin. For example, I have 2 trades today, Canadian and Australian dollars, and I have total of 3 or 4% of risk. Well, it's close to 4% of risk in these 2 trades. So I still can make one more trade, and then I will be basically I will be maximizing my risk to 5%. So that is why I'm saying, do not over risk, guys. I know it's very tempting, and it's it looks very, very good when you make so many pips and so much money on a single trade. But you can make money, of course, even on lower accounts, on like let's say 500,000, but then you need to put a bigger risk that can be very dangerous. So it's up to you how you will manage the risk. My recommendation is use lower risk, guys, and you should always trade relaxed. It doesn't matter if you win 200 pips or lose 50 pips. It's still risk. It's like you will win 2, 3, 5%. You will lose maybe 1 or 2%, right? So on euro dollar, I'm careful now with euro dollar. Today I was almost on my Telegram group. I wanted to say, guys, go long, and then what would have happened is probably we would have made like 15 pips or 20 pips a long trade, and then I would say, okay, now it's time to protect profits. And many people would think, okay, I will not take only 20 pips, and you see now euro is reversing. So Mondays are not very, very favorable, but still, well, at least we need to trade what we see. So I'm very careful. 2180 is buy close to, guys, 2180. I wouldn't go with 20, maybe 22, 2195, but it would be good that if it drops a little bit deeper. 2130 stop, 2360 is TP. It will depend much on ECB announcement this week, so please have in mind that you should close your trade. I will check it, but I think it's on Wednesday. So you should definitely close your trade if you're in profit before it. We don't know what will happen on ECB announcement. Sell is 2360. At this point, if the price goes to 2360 soon, then it could be like, in my opinion, 70 to 80% sure sell, but I'm not sure because the price is dropping now. Still, it's ranging. It's ranging, and you can see that from the even 4-hour time frame. I will do it right now. Just give me a few seconds, guys. I will open euro dollar here and we'll show you right away. Here you see on 4-hour time frame, it's ranging price between monthly time frames. Now between monthly H5 and monthly H4, we see a range, guys. So Camarilla indicator, I really like to use it a lot, and especially because it's showing these levels in a right manner, guys. You see the price is going up and then it rejected. The price is going down, it rejects. And where? Straight from monthly H5 and monthly H4. This looks like inverted head and shoulders on 4-hour time frame, yet it gives me, as I say, confidence that euro dollar long trade can go up. It looks like it can go up because of this left head, right shoulder. So this looks like bullish SHS, but it needs to break out of this trend line in order to proceed further up. So I'm careful, but as I say, I would like to see this euro dollar nice long trade if it happens. GBP dollar is in uptrend. 38.80 is buy. Stop loss 38.40. TP 40.70. Positional sell 40.70. Stop 41. TP 39.70. As I'm very clear regarding GBP dollar, I won't be selling GBP dollar before it really makes a nice move to the upside. This is the price where I would sell, because if it breaks weekly H4, the chances that it will go to weekly H5. The sooner this happens, the better for sell trades, because then we still will have like 2 or 3 days to actually sell from this level if it happens. Now on long trades, as I said, 38.80 could be a potential long trade. 38.80, then we need to drop on 1 hour time frame and see 38.80 here. The price is supported at daily H3 here. We also have well, basically we have a order block here. We have some gap that has been closed, ATR pivot point, previous low. So the price could get here up to 88.6 and then spike to the upside. So this is long for me opportunity here. And you see, guys, there is a nice trend line that should capture the price here. A lot of confluence within this zone. As I said, sell around 40.70 because this level hasn't been tested yet. So I hope that it will be tested soon, and then the price might start to drop from this level. Australian dollar, I am already in a trade. It happened around 80.06. Sell trade, this is the entry, this is stop loss. Potential target is 79.65. Potential buy 79.50, stop here, and 80.10. Okay, is a potential target here. I actually made an entry based on my type 2 indicator that is a part of Camarilla MACD method. Price made a 2-point pattern on an M15 time frame close to this ATR pivot point. The price is trying to reject now, but if you watch 4-hour time frame here, it looks like it's topping out, because this is low, this is high, this is higher low, this is higher high, then price made a low, and this could be a lower high. So it looks like the price topped out exactly from weekly H3. So let's see if this trade will be successful, but there is potential for further drop, especially if this this monthly H4 breaks to the downside. Then the price could get close to our target and close to WL3. So for me, this is Australian dollar, and sell here is already in place. Another setup that I'm currently in, and it's not in profit, it's CAD yen. I made this trade early morning. I have 1.7% of risk on this trade. My entry is slightly lower. It's actually wait, did I make a typo here? Yes, typo, of course. Let me correct this typo. I will do it right now, guys. Just let me correct this typo. Just give me a few seconds. Yes, 88.85, exactly, guys. You know, guys, one of my principles when I trade is to be always transparent and honest with my setups. And if I lose a setup, then I will, of course, update it as a loser trade. I do it always, all the time. Or here on our weekly recap and on my Telegram channel, I always update when I have a loss and when I have a profit. Even if I close it for 20, 30 pips, I don't say I close it for 100 pips. I just say I close it for 20, 30, and there is a maximum pip pool. So some traders could actually maybe, well, use this as further guidance to maybe make more profits than I did. So this is the trade, guys. And as I say, I wouldn't, yes, stop loss could be 89.40, add 2 to 5 pips, and the spread, so it's around 89.45. 45, 46 is total stop loss. Why the CAD yen short, I will show you. I know that they rose the percent, but it was already priced in the market, Felix. And this was purely technical trade. I will go with this setup and I will explain why I actually made a short. So you see, guys, I wanted to wait. Let me just open my chart. We can do it like this, but we can also open another chart that is not clustered. You see my positions on live chart. Wait, I will open another chart that is not clustered like this, so I can explain why I did a short trade. Okay, just give me a few seconds, guys, and I need to open a standard account here, and then I will go with CAD yen. Okay, guys, so this is it. Basically, here. The trade was based on a weekly, daily, and 4-hour time frame. So basically, weekly was going down. Watch this big candle. On weekly time frame, guys, if you see this candle, for me at least, I'm a price action trader. For me, it's very hard to negate this type of candle. Even this one, this candle here, it still made another low. So it made a pullback. I will zoom it in. It made a pullback and then it made another low. You see? So for me, it's like, it's very hard to negate this candle. This is like it's almost a dark cloud cover, but it's even stronger because it ate complete body of the previous candle, and this one just made a slight retracement. It didn't even make a retracement to 50% of Fibonacci, and then it made a new lower low. Now, if we go to daily time frame, based on my Camarilla, this was thick red, and it dropped, and it was dropping by the time I made an entry. 4-hour made a retracement already, and that was a purely 1-hour trade setup. So basically, the setup was initiated here early in the morning, guys. This was my entry, and basically I had a confluence of type 1 and type 2 entries on my Camarilla MACD template. If you see this, well, it's a bit surprising for me that it keeps going up. But simply because of this surprise, I made my stop loss at 89.45 because I added a few pips here and there, and of course I always add few pips above the resistance, and the FTR projection is 89.38, so it's like 89.38 plus 2 to 5 pips of this difference and small spread. So my stop loss is 89.45, but I put 1.7% of the risk on this trade. So it's a very low risk, even lower, guys, because on my real account it's even lower. But I know if I tell you that you put low risk, you would say that you don't maybe have a big enough account to put that kind of risk and make some substantial money. But I always say, guys, put in between 1 and 2% per trade. Do not go more than that. Do not go more than 5%. So I'm still thinking that if the price wants to retrace deeper, now it might start to retrace on 4-hour time frame. So you see my logic. We still have a downtrend on 3 time frames. We still have downtrend on weekly, retracement on daily, and 4-hour now could be actually could initiate a U-turn. If I don't see a U-turn on CAD yen 4-hour time frame here, guys, now the price is also in the zone, but the zone on 4-hour time frame, then I will lose this trade. But what can I do? I'm already in a trade and I have stop loss set, and I already predetermined every parameter before I enter the trade. So that is why I say I don't move my stop loss. I'm always waiting patiently. If it hits my stop loss, I will lose 1.7, 1.8% of my account. Well, is it too much? No, guys, it's not too much. We can still make it up. If it turns in profit, then I will patiently wait for markets to drop. I will wait for at least 25, 30 pips of profit, and then I might protect my trade. Okay, because I enter with very low risk, I might actually move my stop loss in 20, 25, 30 pips in profit and simply continue to move my stop loss as the price drops. But of course, if it happens, guys, if it happens. So at this point, this is the trade that I'm in, and well, I will patiently wait for something to develop here. And question Felix is asking: will you go long if it breaks WL4? No. Simply put, I will see what will happen during this day or during the night. If I'm stopped out, I will see where the price, what will happen early morning, and early morning I might make some new decision. But at this point, I will not go long because I'm in a short. I don't do revenge trades. If it hit my stop loss, I am always calm, guys. I accept stop loss. You need to know that. So that is why I say trade with low risk. That is why you can stay calm if you're trading. So I will not go long because the price will already probably made its ATR. You see 65 versus 84. If it gets there, it will be almost full ATR. So then, of course, I cannot go long when price already reached its long projection. You always need to watch the ATR. And that is very clear, I hope. Gold. Again, gold is in uptrend. Positional buy 1325, stop loss slightly below 1320, TP 1343, sell position 1343, stop loss slightly above 1348, and TP 1325. Okay, here on gold, guys, it's also clear to me what a price is trying to do at this point. If you zoom out, guys, you see that this is effectively an uptrend, but the price actually is now, you see, it's trying to go this way. It's trying to reject here and go up. It's consolidation, very clear consolidation. Consolidation in uptrend here, okay? This might look like a bullish pattern here, but I would wait for WL3 because at least what I have noticed on my Camarillas, price really tends to respect WL3 and WH3 in ranging markets. And today it's a bit rangy market, especially gold. Also going up, then rejecting, up, rejection. You see down, up, down, up. So this is consolidation. I would like to see that the price drops, and then if it drops, we might actually go long there, probably 1325. Stop loss is below 1320, and 1343 is here. 1343. If the price gets there, I think it could be an instant sell because of this double top. And even if the price collects some stops above, it should reject lower. Okay, it should reject lower. So let's see what will happen. But I think that there is a possibility for the price to first go up, and then maybe I think it could reject from this spot. It's rangy. It's a bit rangy. You can see also here from this ATR numbers. And optional WTI, as I said, WTI uptrend 63.00, stop loss 62.40, TP is 65.50, sell 65.50, stop 65.90, TP 64.00. Let's see if this also makes some movement as expected here. 63.00, you see it's already the price rejected during the previous week. If we see a retest of monthly H4, it could happen here. This is also close to this order block, so I think the price could reject here, okay, and it could go up. Now still, you see, it's like it's being bought on rallies, but it's also sold from WH3. You see how the price respects, guys, WH3 and WL3. Very often I'm very tempted to do naked trades, and a few times I did so. I'm starting to think that each Monday we could see actually straight rejection from weekly H3 and weekly L3 without any other indicator. This is purely technical setup, and you can see that it's really respected. I still need to do more testing, but I think that there is a scope for some blind naked trades using purely Camarillas. So rejection here, rejection there, and well, you see 65.50. If it gets here, if it really breaks this consolidation, guys, monthly H5, weekly H5, it should drop. So let's see if this will happen. So these are my setups for this week. I hope that you enjoyed it. If you have any other questions, guys, you can ask me. I will roll the slides now so you can take snapshot of the market. And as I say, please, if you want to listen to me, if you want to be successful, just trade with low risk. It will take some time to bring your account up, but then it's good because you learn to be patient and not to gamble in Forex market and in financial markets, right? So euro dollar, and then I will, guys, as soon as I roll slides, I will answer your questions. Euro dollar, pound dollar, Australian dollar, CAD yen, gold, and optional trade WTI oil. The question, what do I think about GBPN? Daniel is asking. GBPN is very, very strongly bought to the upside. I am I'm not happy that because I didn't, I was planning to do a long trade based on my Camarillas. It was clearly technical trade from my daily histogram was very thick blue. The price showed upward momentum. 4 hour was retracing, and unfortunately I didn't make a trade. And honestly, guys, and Daniel, I'm very sorry that I didn't make a GBPN trade. But if I had done it, it would have been 100% a long trade, straight from this here position WH3. Unfortunately, I missed this trade completely. I didn't trade it. To me, this looks very bullish. Pound yen is already made its full ATR. It's overshotted it. And if it gets here, I'm not sure that if it gets there, you should sell it. What I would do here with pound yen, I would open 1 hour time frame and wait for some nice divergence. We already have it, but it needs to be confirmed. You need to have a clear divergence, break of trend line, and go short as a counter trend trade. But you need to wait for a price to start making a U-turn. You cannot short blindly. Blind shorts could only be possible if price just simply goes here to WH5, but I'm not sure that it will go there. I think that price really should drop. And one of the reasons, guys, why my CAD yen trade is in a loss is because pound yen is pushing yen pairs higher. Yen is dropping, pound yen is going higher. Watch this, guys. 160 versus 133, and CAD yen also. So we really see a very, very, as I say, it's a weakness in yen, and this is why it happens at this point. It's really a weakness in yen. So I would say wait for the price to make U-turn, go with divergence, put a trend line. You can even zoom on 30 minute, 15 minute, wait for a trend line break. Jonat, you're right. BOJ will make an announcement tonight. One of the reasons I will keep my CAD yen trade, I'm totally relaxed, guys, regarding my CAD yen. Really, I put into 50 pip stop loss. I put 1.8% of risk. So if I lose 50 pips, it will be a loss of 1.8% of risk. So it's not much. So let's see. Felix is asking, can we short CAD yen tomorrow? I don't know if I will lose this trade, but as I said, I clearly did technical trade here. So I'm still waiting for the price to show some sign of weakness, and then we could actually see a profit here. But really, this is really downtrend. This is M pattern here. The M pattern broke here. It still has room to the downside towards L3 8830. So, let's wait. Felix, tomorrow price action will depend on yen BOJ announcement tonight. So please be patient and be careful if you want to short it. To me, this looks bearish. So I would go short on rallies indeed. Mattia is asking for Euro New Zealand. At this point, Euro New Zealand. Wow, wait. Euro New Zealand. I will do a drill down. Weekly strongly down. So it looks like it started to reject now. It started to reject straight from monthly level here. And Mattia, if it closes below this ML3 6705, I think that it's good to go towards 65. This looks bearish to me. And yes, 4 hour is bearish. Lower time frames are bearish. This is short on rallies. For me, Euro New Zealand Mattia is short on rallies. GBP New Zealand. Yes, you can see. I think that it could reject from 67.60 here. It could show some rejection from this spot because of this double top. Now it's resistance. It could reject. If it gets there, it could reject. But even sooner, it might start to reject. But watch for rejections here. For me, this is down move, especially if it continues below here on daily. But at least today was a good day to go short on Euro New Zealand. Regarding intraday trades, guys, this was a short trade here. As I said, I was really focused on CAD yen, and I was waiting also for Australian dollar to make a sign of counter trend move, and I didn't pay a lot of attention to these pairs. It's my fault probably, because if I traded pound yen and Euro New Zealand, it would have been much better than this. Now I'm stuck in Australian dollar. The price is still going over. It's 3 pips of profit, and I still need to wait to see a development. And CAD yen, that is also stuck in a small range. So obviously this needs to wait more. So Euro New Zealand was much better. This was shorting opportunity according to my Camarilla MACD. As I said, I missed it. And pound yen, unfortunately, well, it happens also. You don't pay attention you don't pay a lot of attention to some big movements, and well, this is what I missed the most. This great pound yen today. Although I cannot say I didn't miss this 15-minute short entry type 1 on my Camarilla MACD method. It was a really scholastic example here. But well, it happens when you're not paying attention to all of charts, but simply you wait for fewer 2 or 3 pairs to hit. But well, at least I have a trade, 2 trades that I planned, so it's nothing bad in that. Okay, but yes, we can see that basically Euro New Zealand already made its almost full ATR. So I would like to see a little bit of retracement and then probably short it. New Zealand dollar is still valid. And almost instantly, guys, when I posted the New Zealand dollar setup, it went in profit. I will show you right away. Just give me a few seconds. It was, of course, as always, it was announced on other markets here. Well, as soon as I posted this trade, it went up. It almost hit. And it hit, yes, it hit my target. The trade, I would say, the simple explanation, New Zealand dollar, Christian, is yes, you can go long on dips, definitely. To me, this is very bullish, so you can go long on dips. The question from Calvin, GBP New Zealand. GBP New Zealand, big uptrend. But you see, the price didn't make it through its full ATR projection. Daily, clearly up. 4 hour, well, wow, this could be actually a start of a nice move. I would go long on dips, Kelvin. Long on dips. If it drops to 90, 50, 90, 60, I would say go long. This is your target. 91, 60, 65, and then you might start looking for short entries. Momentum on GBP New Zealand is very strong. Bullish Marubozu shaping up. WH3, it could start some rejections, but I would go long on dip if it drops. This is strong. Lois is asking, what should I do with New Zealand dollar CAD? He put a sell on New Zealand dollar CAD at 91.03. Let me see the New Zealand CAD. Yeah, this looks like, wow, it isn't, it's bullish, but yeah, it's the time to probably make, yes, it's okay, Loise, because you made it here close to WH3. I would put a stop loss. I'm not sure how big your risk is. You need always to make your risk calculation before you enter a trade, because here I would make a stop loss, maybe not here above weekly H4, but probably slightly above this pivot point, 91.26. But you need to see within your own risk. If your risk is too low, then then you can make a stop loss here. It depends on your risk. If it's not too big, then place a stop loss here. If it's high risk, then you need to place stop loss here. Simple as that. You're trading the risk. Dollar yen. Dollar yen. Okay. Yeah, dollar yen. I was also paying attention to this pair today. To me, this looks like a potential 4-hour sell trade. Again, yen is a bit weak now, but this looks like it's maybe starting to shape up for some potential shorts. Here we might see a short setup around 111.30, 40. I think it could drop. So at this point, dollar yen is bearish. Another bearish rejection could happen here. So try to see it. And continuation can only happen if it makes a U-turn and then breaks this trend line. Without a break of this trend line, it could turn into uptrend. So guys, always remember, when you make a trade, it's usually a positional trade. Continuation is only if it breaks a trend line or if it makes a new low for short trades. See, it's also for long trades. If it breaks a trend line and makes a new high, that is called continuation. For dollar yen, if we see a sell from this spot, and continuation can only happen if it breaks below WL1. It's an X cross of this trend line, so it should proceed further down, break this WL3 and close below the WL3. Then we will see a continuation lower. You need always to pay attention to these things, especially if you trade on intraday time frames. It's very important, guys, very. Okay. And question from Vito: how do I see dollar? Australian dollar CAD. I see that, well, WH1 rejected only 30 pip. I see it very slow. I see rejections now. It could go down, but this is the range. WL1, WH1. If it breaks WH1, it should go to WH3. If it breaks WL1, it could go to WL3. Simple as that. Very slow, but you are definitely stuck in a range, Vito, at this point, if you trade it. If you're trading it. So guys, I think that this is all for today. Let's see what we will have. Some pairs are very close to its retracement, especially pound yen, pound New Zealand. Watch for some short trading opportunities. Dollar yen also could turn, and let's see what will happen. If you're in trade, use some trailing stop expert advisor to actively protect your trade if you go to sleep and your trade is not in profit. If you're in profit, you can put a manual stop loss protecting 15, 20 pips depending on your profit, and then you can go to sleep safely with a calm head. Thank you guys for listening. Let's see what we'll have this week. Yeah, just quick recap of slides. Mohammed is asking, and we are good to go. So this is euro dollar. This is pound dollar. This is Australian dollar. This is CAD yen. I'm already in this trade, and I'm already in Australian dollar trade. For all of you who join up later, my maximum risk is around 4% for these two trades. Gold trade and optional WTI. Thank you guys for listening. I will talk to you soon. Cheers, and as always, trade safe.